So let's talk about building a strategy. But before we hop in, I like to think that I know my audience pretty well, but I know there are new followers to the channel each and every video. So I want to be straightforward with this. This is not a completed strategy. This isn't something that you should pick up, put on your charts, and start trading with live money right away. Rather, this was a discussion from one of our live sessions where a trader was looking into creating an EMA strategy, and we had a conversation about the balancing act of doing so. What do I mean by the balancing act? Well, one is understanding the good and the bad components of your strategy, meaning times in the market where it will prosper, and then also times in the market where it will struggle, but also the balance of adding filters to your strategy, meaning things that you can enter in your trading strategy to keep you out of bad scenarios, but also limit the amount of frequency, so trading opportunities that you have. And also when it comes to like target taking, for example, how you may have to deal with the mental battle of shooting for very long targets, which sounds kind of weird because we hear like long and profitable targets. We think, yes, that's great, but it actually is mental torture, and kind of what you can do to find the sweet spot where you get a good amount of profit from your trade, but you also don't leave a lot on the table for the pullback. And that will make sense when we get into the video. So let's hop in. Yeah, there's no magic to it. It all depends on what you want to achieve. There was a strategy. Here's a good example. Well, I guess so here's a good example right now of changing, right? So let's say I'm going to use like a moving average cross strategy, right? Is anyone not familiar with a moving average cross strategy? Where you buy or sell based on one moving average crossing the other, right? So if I want it, so here's a quiz for you guys. So if I wanted more signals, what would I do to my EMAs? Would I make them closer together or further apart? Closer together, right? So if I want an aggressive moving average cross strategy, let's say I take this, I have a 20 already, 21. Let's say I take this to 13, right? I do 21, 13, sticking to my fib numbers, right? You're going to see, look at all these signals, guys. Look at that. Oh, ooh, cross right there, buy. Cross right here, or ooh, exit right here, cross right here, buy, right? I get a lot of buying signals, right? But then what do I get in these things? I get a lot of signals as well that beat me to death, right? That's the life of a moving average trader. Everyone glorifies like the big trendy sessions. Like, so you have this period right here where it's like, all right, if I bought on a cross, I would have bought right here. And then look at this bad boy. I would have rode it all the way up until the next cross right here. How many pips was that? All the pips, right? From here to there, right? 238 pips, yeah, right? Everyone loves that part, right? But what they don't realize is that when we get to periods like this of consolidation and we're getting a signal here and then another signal here and a signal here, right? Is our strategy like, is it prosperous or is it getting destroyed in these periods? And again, these are the parts they don't show you on YouTube, right? Because that doesn't make you want to buy their system. It's dead, right? This is like, in the period before I showed you, you're making all this money, right? You went to the ATM or the bank, you deposited all this money, you got your lottery ticket, you're walking out, and then you get the consolidation, and consolidation is the dark alley where someone sneaks up behind you with a bat and beats the crap out of you, and then takes your money. And then you walk back to the bank in another trending period where it's like, oh yeah, look at this. Cross right here. Ooh, sell it all the way to here, right? And you made your money again, right? We see all these we glorify these great periods, right? 355 pips. But we forget about kind of the choppier periods. And in the Forex market specifically, right? We know the ratios, right? Who can tell me the ratios of trending versus not trending in the Forex market specifically? Who remembers? In general, right? Every pair is gonna be different, right? It's close to 70-30, and 70's on the consolidative side. So if your strategy is prosperous in trending situations and horrible in non-trending situations, then 30% of the time there's glory, 70% of the time there's shame. Now, does that mean that you can't be profitable? Does that mean that these strategies are stupid? Dumb? Go dumb, 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 right? No, it doesn't mean that, no, right? What have the turtle traders taught us? You can easily be a 30% trader and make lots of money as long as you make more during your wins and you lose during your losses. But what that means is that when it comes to strategy development, you have to either, one, add a filter that limits your signals within the chop, so you get less signals in the chop, yet maintain your signals in the trend, or you adjust your indicator so that maybe it doesn't give you as many signals. You still get the main signal during the trend. It probably comes a little bit later because if you slow things down, you're going to get a later signal, but it should be a more accurate signal. So you're going to get in your wins late. You're probably going to get out of your wins later as well, which means a little bit less profit during those trending periods. Again, this is not taking into account any other, if we're just looking for crosses, we're not adding any other type of exit strategy, which I would advise adding an exit strategy. Maybe we'll talk about that later as well. But it's going to keep you out of some of the chop during the consolidation, right? So if we just look at this area right here, and let's adjust our moving averages to something. Where do my moving averages go? There we go. Let's adjust our moving averages to, and again, not a moving average trader, guys, but I have experimented with a lot of strategies. I do years and years of strategy development. I like playing around with stuff. So I am knowledgeable about them. But let's change this to, what do we have? 13 and 21? Let's change this to 89, right? And then we're going to move him back to 55, right? This is going to be an extreme example, but 89 to 55, right? So we're widening them out, right? So what did I do now? Well, again, you see this big trending area? I still caught it, right? Where's our cross? Our cross is right here, right? I still caught this heavy trend, right? Now the problem is, right, I wrote, and this is, again, you've heard a story about when I traded the SOS system where it was a trend continuation strategy where the problem was, it was a profitable strategy. I wasn't yet a profitable trader mentally, but it was one of those strategies where it routinely had 600 pip winners, guys. Like routinely, like I'm not lying. Routinely. The problem was most of those 600 pip winners came after the market moved over 1,000 pips. Now put yourself in my shoes, right? You guys are all getting happy and dancy over 600 pips, right? Doing the money dance. Now I want you to sit there and imagine though, you being up 1,000 pips and settling for 600 pips. And settling's not the right word, but like, because you followed your plan, it should be, but that's how I felt settling. Like, does a win still feel like a win then? If you were almost up double what you took home, it should feel like a win, but in real time, no. Because when you see 1,000 pips, right, on your screen, you're like, oh my gosh, right? You've got your wish list, your Amazon wish list is filling up. And then you get 600 and you're like, it's good. But in your mind, you're like, man, I had 1,000, like blah, blah, blah. So like, here's an example of that, right? Again, you enter right here on the cross. I'm just showing these things, right? Maximum favorable excursion, 1,645 pips. Ooh, baby, baby. Ooh, baby, baby. If you're exiting on the cross, I don't even know when the cross comes. If you're exiting on the cross, right, you're riding this thing all the way out to, looks like right here, right? What was it, 1,600 pips? And again, I'm not going to do this super accurately. 600 pips, you exit it right here. This one maybe, 4,000. You left 600 pips on the table. How does that make you feel? Right? So you can see widening the EMAs, right? You're going to get in a little bit later. You're also going to get out a little bit later. But what did you avoid, right? Remember this box? What was this box on the last example? This was the choppiness, right? This was the dark alley where you got beat to death with bats, right? Sorry, I'm from Philly. This is, what we do. Were there any signals within here? No. You avoided the dark alley, did you not? Right? You see the delicate dance that must be played. And I always say there's a give and a take, right? Because yeah, you avoided one situation of the dark alley and getting beat to death. But you put yourself in another situation of now mentally, ooh, I gotta deal with these longer trades, which everyone loves longer trades because they think it's great, but trust me, it's horrible. It could be horrible. Right? So you're trading one for the other. So the key in trading is finding that balance. What is the balance between staying in trades long enough, but also avoiding these areas? Now, what I would say, if I would not use a moving average strategy as an entry and an exit, or at least the same moving averages, meaning that my entry signal would not be my exit signal. When it comes to strategy development, right? So I like having an entry signal. It could be using an indicator. I like having a different exit signal, meaning that I don't want to go through all of this and hang through all of this, because this is also spreads and commissions, guys. I'm getting eaten alive with fees here too to be here. My question is, how can I exit here, right? Not at the very bottom, but maybe like somewhere here. How can I exit there? So what's a different exit indicator, right? Maybe I throw on a parabolic SAR, right? Again, we're not going to go too deep in here, but just giving you guys an example. Maybe I throw in a parabolic SAR, make it a different color, so you can see it and play around with that. Parabolic SAR is basically, it's commonly used as a trailing stop-like indicator. It actually doesn't have to be that. It could be an entry indicator too. But say I'm playing around with something like that. Well, this one's really tight. I can always adjust it, but you can see, okay, maybe I don't want to do that because I got in right here. I'm already taken out right there. So either that's not going to work for me, or maybe I have to like loosen it up so it trails it a little, not as close, right? Maybe I use something with an indicator, right? Maybe I use an RSI, right? Maybe I say, hey, I don't want to get in, or a stochastics. Maybe I don't want to get involved until the RSI goes overbought and then crosses back over a 30 line, or not a 30 line, a 60 line, right? So I draw my line out here on the RSI at 60 or 66, and I say, hey, I enter here. I'm not going to exit until we cross that 60, right? If we know the RSI zones. That 60 exit is right here. Okay, well, that got me out a little bit later than the parabolic SAR, but not as much as the moving average. All right, well, maybe I do a stochastics. Or what do I have up here? I have a MACD up already. I don't really know the MACD too much. I don't use it, but let's just, while it's here. Does this do anything? Maybe I wait for the MACD to cross back over the zero line. When I do use, I don't often use MACDs, but when I do, I typically only use it to cross the zero line, right? So I take away all this histogram, I take away the signal line, right? My MACD looks stupid. It looks, I'll show you what I do. And again, I don't play around with the MACD too much, so I don't have any favorite settings, but I typically get rid of that. I don't really care about that. I want my MACD, my 90s rap name. I won't want my histogram. I do want my zero line, and that's what I care about. So maybe my exit strategy is, once the MACD crosses the zero line, that's my exit, right? So I'm here, I'm below the zero line. Maybe that's a filter as well, right? Okay, I get out right here. All right, well, look, how do we judge this, guys? Well, okay, it's better than the parabolic SAR, right? Yeah, that got me out here. It's better than the RSI crossed the 60, right? That got me out right here. It's better than the moving average cross, which I forgot where it was at. Where did we cross at? Maybe about the same moving average cross. Over here, got me out a little bit earlier, right? So maybe that's something. I didn't get all of the move, right? I didn't get all of the move, but I got a lot more of it. Or about the same of it if you go to the other cross. So like you play around with these things, and as always with indicators, like I don't think the default setting is ever the setting you should use. You play around with the settings, you move it around some to make it give you as close as possible the signal that you require. You can use another moving average too. You can use a smaller moving average where you have 55.89. Maybe that's your entry. Maybe you go back to your 21 and your 55 for your exit. right? Let's just throw that on real quick, and then we'll be done with this example, I promise. But just giving you some ideas for you guys that are going through your strategy development. Maybe you have your, we didn't even talk about Bollinger Bands and Keltner channels. Let's do one more since we're on it, right? You guys don't mind, right? Maybe we go back to our 21. I think it was 21 we used earlier. 21 and 55. We talked earlier about my early day chart, right? It's going to go back to looking like an early day chart, isn't it? You're going to have 15 different indicators on here, right? Maybe we go back to our smaller moving average combo. I'll give myself some real estate here. And we see, okay, we entered on the big one, pink and white. We exit on purple and white. So where does purple and white cross? Right around here. So I got most of the move. Again, we're never going to get all the move, guys, right? And that should not be an expectation, right? The expectation shouldn't be to get all the move, but we got most of the move, right? We got 1,000 out of it. So, and then again, obviously you play with this stuff to try to maximize it. But does that make sense? The indicator game? I'm sorry, I didn't mean to go there. I did not mean to go there, but that's kind of the look at strategy development. And obviously, it's more you're organized, you're taking notes as we spoke about earlier, and you're tracking things. But the idea of playing with different things and the ideas of doing this and doing that. If you guys are new, don't worry. This is all in the strategy development section of the course. But just to kind of give you an idea with indicators, it's you start with an idea, and then you evolve it from there. But it does take a knowledge of price action and how to use the indicator and which indicators to use to be able to evolve it in the right way. All right, I'm done, I promise, because we can go on forever with different ways. Oh, I did want to say one more thing. I want to take a look at it. Carlos says, speaking of adjustment, how do I calculate my ratio between the length and the smoothing of EMA? I don't know. Again, it's you adjust the numbers. You adjust the numbers to show you what you want your EMA to show you. So there's no magic ratio. You have an understanding of, I'm using this EMA or whatever indicator, and I want it to show me this, right? Whatever your purpose for that thing is, right? If it's a filter, you want it to show a directional filter. If it's a cross, you want it to show you blah, blah, blah. You adjust the settings until it shows you what you want to see. So there's no magic ratio. There's no magic number. It's all based on what you want your indicator to be. Your indicator is it's your machine. You are programming your machine to show you what you want to see. Before you go, hit that subscribe button if you're new. Show your boys some support by hitting that like button as well. Lots of content on this channel. My goal is to give you something that will help with your trading and a place you can go on a daily basis to receive support, knowledge, education, whatever you want to call it. All right, until next time, plan your trade, trade your plan. There will be a podcast kind of following up on this conversation as well. So watch this space for the next Trading Coach podcast episode as well. Hopefully I time it where I put it out right after this release. All right, take care.
I want to be the best in the game, invest in my name, check no restraints, I'm obsessed with the pain. I ingest, I retain, assess and I change, possessed by the thought I'll be free one day from society's restraints, money, clout and fame, mud, disease, a plague. We all love to hate, have to play the game, have to make a name, all our insecurities are on. This is war.